Not long ago, many people in Kenya had little or no insurance coverage. Now, however, comprehensive and innovative services are readily available to the masses, so much so that it's become an extremely attractive market for foreign capital. With me now to discuss this potential is Ambrose Dabani from British American Insurance. Well, Ambrose, the Fitch rating agency reported that investors' appetite in acquisitions in the Kenyan insurance industry has pushed up valuations significantly. What would you say the driver is behind this?
You must realize that Kenya today is a growing economy with very low insurance penetration. There's a growing middle class and therefore increasing the capacity of people who can buy insurance. We're also having a regulator who is looking at increasing penetration, attracting foreign companies to come to the country, and he's encouraging them to come through acquisitions. One of the things you can choose to come as a greenfield setup, but that has its own setup challenges and setup risks. So what the regulator is preferring is that the companies coming through should come through an acquisition, and therefore that has led to increase in the demand side.
So the market's seeing a lot of consolidation. What do you make of this?
We have currently pre-consolidation about 43 companies, and it is a feeling of the industry that that is too much, and therefore we're looking at a period when there's a lot of capital investment required in terms of innovation, in terms of technology. There is also increase in regulatory capital, and therefore the smaller companies are therefore looking to be bought out. So therefore that is also on the supply side in terms of insurance companies that are looking to be acquired. That has also increased.
And compared to its African neighbours, why would you say the Kenyan insurance market's flourishing?
One, very low penetration, so that means definitely there's an upside potential. Two, a growing population, a growing economy. That means the middle class is also growing. That also increases the market. And also at the moment, there's a lot of technological innovations that are giving room for increased innovation on products, on distribution. Kenya is also seen as a hub to the rest of East Africa because of its geographical location, developed financial markets, educated labor force, and therefore, naturally, anyone who wants to come to that part of the region will start with Kenya.
Well, as you mentioned, like most industries, technology is changing the insurance landscape. So what innovations are coming to market?
Technology is changing, and specifically to Kenya, there is what we call the mobile money phenomenon. You must have heard of M-Pesa. Now, that is where you can have all your money on your phone, never have to visit a bank, but yes, you have all the banking services on your phone. Now, that is really changing a lot of things. It's changing the nature of products that we're having. Now we're having mobile phone products. You're signing up insurance on your mobile. It's changing processes. Now you can have all your customer care services on your phone. It's also changing the way we distribute. We have 20 million people now. We're talking about 20 million out of 45 million population. So that's a huge proportion that is on a mobile phone. The penetration of smartphones means that you're able to distribute insurance products through your mobile phone. So yes, that's creating a lot of innovation around distribution, around products, around processes.
And how do you tailor your offerings to individual needs? And indeed, what are these needs?
As I said, we have diversified financial services. We offer products from any stage of life, right to the time you get out of school and get your first job. Of course, you have your short-term savings needs, either to go back to school, either to get married, or to start having a family, buy your first house. So we have lots of savings products. Then we move on to maybe at the point when someone now has a family and you're thinking about education for the children, thinking about personal healthcare. We all have those products in Britam, all the way to savings for retirement, and also even accommodating retirees with all their needs around regular income, around meeting their medical requirements. Very, very innovative products at Britam to meet retirement needs, retirement expenses, regular income till death, and even to the spouses and all other dependents thereafter.
In terms of asset management and investments now, how do you manage risk?
At Britam, we have a separate full-fledged asset management company, very, very rapidly growing in terms of assets under management because of the investment philosophy that we have. You've got to remember that we manage people's money, and therefore, first we've got to deliver the return we promised, and with certainty around that particular promise. So therefore, We are not gambling with people's money. We have processes, we have quality controls in place, we have risk management as a function right at the board, senior management and the risk management function that reviews our processes. And we do our investment based on asset liability matching principles so that we don't take too much risks. Remember that we are also a regulated company, so we also have to have a look at what the regulator advises as the correct investment principles. So yes, risk is very, very well managed.
Finally, how do you see this industry evolving over the coming 12 months?
The coming 12 months are going to be busy, both industry level, at Britam level. It's going to be busy. We expect that consolidation will continue. We're still hearing of new companies from Europe, from South Africa, looking for appropriate companies to buy. We expect that there's going to be new legislation or regulatory environment in place. Currently, the draft is being discussed by the industry. It's causing a lot of excitement as we move to risk-based supervision in line with the rest of the world. So we expect that is going to continue. We're seeing more and more insurance companies are going to jump onto the technology, coming up with innovative products, innovative distribution models, and innovative servicing just to be more efficient and cut their costs and deliver value to the client. So therefore, we expect lots of activities. It's a very interesting time for insurance companies.